All right, so we're finna break down. So we're finna break down exactly how we won two trades today, just by learning correlations and just by knowing that there's a delayed reaction in the market. Let me explain what I mean. So these are the two trades that we won today: US 30 and Nas 100. Both indices, both pretty much move identical to each other. One just lags behind the other sometimes, but you'll see what I'm saying. So let's start with Nas because that was the first one that I took. So first thing you want to do is look for the 1 hour impulse, which just means we want to look at where was the most recent push in one direction. So where was the most recent push in one direction? That's all you want to know about the 1 hour impulse. Let's go back to when the session opened up. Let's hide that. And let's delete those. All right, so 1 hour impulse was right here. So we know generally this is a measure of the US economy. So we know that it wants to go up. That's why I really don't like taking sales on indices, because we know this is a measure of the US economic health. They don't want the US economic health to be down for long. So they want to keep pushing that market up so that investors are happy and that the US looks healthy. So generally, I don't like taking sales unless we have some clear direction in the opposite way. So where was the most recent push in one direction? It was right here. So that's the 1 hour impulse. From there, you want to see where it's going to react at the high or the low of the previous session. The previous session, which just means a timing period that trading happened. So the most previous session was London session, and so we want to see when it reacts down here, because once it reacts down here, we know that it's going to have to get some people out of there. So in order for us to win, some people have to lose. That's how we're capitalizing on it in order to win. So all we want to do is see if price reacts right here. If not, we're waiting for volume. So at 8:30 in the morning, Central Standard Time, that's when the market opens up, investors flood in, and we want to follow the big money. So those are the two things that we're looking for. So boom, 8:30 had hit. We knew that we wanted to see reaction right here, but we also want to follow where the immediate volume is at. So originally I thought I missed the trade because the volume was right here. So once it passed right here, because that's usually that's where we would want to take volume trades at. I thought that it was going to move in that direction for the day, just because that was where the immediate volume came, and usually that's where price goes once the market opens up, is where that immediate volume rushes in. And you see these big long wicks right here. That's what usually where price is going to go. But I also knew that we were overall on an uptrend, and I don't like selling against indices, so I knew that a liquidity grab was possible, and the liquidity grab is just a name for what we explained earlier of when price reacts to that previous session low. So we got the huge push below this low right here. So we knew a bunch of people got stopped out. So now we know that price wants to reverse in the opposite direction. So once we got a close of a candle back inside of this range, we want to go ahead and take the trade, and that's where. Let me see if I can find where I put that drawing at. We'll just add another one for now. That's where we saw the most reaction at. And that's where we got our entry at. So once this candle closed back inside of here, you always want to put your stop loss below this candle. But whatever candle closed back inside of this range, that's when you want to put your stop loss at. So, and if you don't know, a stop loss is just a name for saying if this chart goes in a certain direction for a certain amount of time, I want to get out of the market so that I don't lose any more money than I was willing to risk in the market. That's all a stop loss is. Once it closed back inside the range, we want to put our stop below the candle that it closed inside of. So right here. And then from there, price went in our favor. Now, one thing I definitely can work on is holding past the high of that previous session and also letting my trades run. I'm usually just a get in, get out type of guy because I have work to do, I have things to do. So I just want to get in, get my money, and get out. But I have been seeing price run a lot after I get out. So going forward, I will try to just take a partial position and let it run and see how much more money I can make. So we won that trade. That was trade number one. But then I went to US 30 and I saw that it was delayed in doing the exact same thing. And as you know, US 30 and NAS 100, SPX, they're all indices, which means they're a combination of stocks that determine the health of the US economy. So I know that if one is going up, the other one most likely is going to go up as well. Sometimes they're delayed because there's different companies in each of these indexes. So one might have AI, the other might have a different company, one might have a different company. So the reactions might be delayed. So it might move different because of that, because it has different companies in it. So I saw that the same setup was happening right here. We had the huge push below in the original volume from market open. And then from there, I saw that it also had one of these zones. Now, this is a little gem that I'm going to give you guys. When you see multiple taps of a support and a resistance in one area, that usually means that there's an area of high liquidity there, meaning that when it gets to that area, it's going to move a lot. Because in order to break through this area, there's a whole lot of orders sitting right here. So in order for us to break through that area, there's going to need to be a huge push of volume, and you can use that to your advantage. That's a little gem for you guys to add into your trading. So when we got back to when we had the original volume pushed back down, then we got back inside the zone of the range. That candle closed right here. I did the same thing, but I just did I just did a regular 50-point stop on this one because it's US 30. I usually only use a 50-point stop. And a point is just $1, guys. So if somebody says, "Oh, it moved up, the Dow moved 100 points today," that just means it moved $100. Just to make it simpler for you guys. So we had that huge volume push up back into the zone, 50-point stop, and including that confluence that we have with this 3-tap zone that we use. All those factors put together, and I know I just won on NAS, so I knew it was going to go up. And then we did the exact same thing on the next trade. So same thing here, though. It actually ran a lot farther, so we probably could have got like an extra unit or two of gain out of this trade. But I was happy. I literally won 2 trades in one day, so you never want to get too greedy in the market. So that's what happened. Let me take off this. So that's what happened today in the market, guys. It's just a combination of experience, confluences, and data. If you are an underfunded trader and you are trying to learn the markets, or you just need some direction and you want to learn just how to trade in general, I do have a free course on YouTube, and I have a free community that you can join to interact with other aspiring traders. And I also offer a paid group where you can get my daily trade ideas. You can interact with me one on one, and you can get all of my strategies as well. So if you're interested in all of that stuff, you can just go to at callmegp _ on all platforms, and check me out there. And if you want to have some free education or some paid education, both of those are available to you. But yeah, that's how we beat the market today.